Hello, guys, and welcome to the MD Investor channel where we talk about personal finance, setting goals, achieving goals, and breaking the cycle of generational poverty. We're talking about financial intelligence, teaching our children financial intelligence so they don't have to go through the things that we went through, working by the sweat of our brow, breaking our backs, making other people wealthy, and not having anything to show for it after 40 years. We're talking about personal finance in all its aspects. We're talking about not only learning but taking action. Today's video, guys, is another step toward taking action. Investing on any budget. One of the barriers to beginning to investing is just starting. And a lot of times people are paralyzed in their mind because they think you need 10, 20, $30,000 to start investing. I don't have that type of money. How do I do it? We'll talk about, the related foundation, such as living below your means, such as paying off your credit card balance so you can have money to invest. But the term investing is very vague. What do you mean invest? How do I invest? In the old days, it would be pick up your phone, call your broker, your stockbroker, and say, listen, I want to buy 200 shares of AT&T. I want to buy 350 shares of Home Depot. I want to buy 500 shares of Coca-Cola. Though in those days, you need a lot of money. Only the wealthy would have access to that type of broker. But now, with the technology that we have, there's a lot of these personal finance apps out there, and we have to take advantage. One of them we're going to talk about today is Acorn, one of the more popular ones. Acorn. We are on the Acorn site right now. So some of the requirements are to open an Acorn app are age. You got to be at least 18. You have to have a valid social security number. You have to have a valid checking account or a credit card account that you could link your account so you could fund it to, okay? They are going to have to ask you some mandatory questions, government mandated questions such as your investing experience, such as your annual salary, a certain range, your risk tolerance. Are you conservative? Are you aggressive? But let's forget about all that. Let's get into the app. So here we are on the app, the Acorn app. This is the total account that I have right now. I had a lot more, but I took some out. Let's go through the site to kind of get you familiar. Here's the portfolio. You see aggressive, and I mentioned before they're going to ask you some of the questions such as: are you conservative? Are you moderate? Are you aggressive? Here I am, and then I have aggressive. So let's let's hit aggressive and see what that shows us. Okay, so in the aggressive portfolio here, it says an aggressive portfolio is more appropriate for those with longer time horizons, younger people, and those with a higher risk tolerance. And here it shows the component of the aggressive portfolio. 40% of that aggressive portfolio is in the Vanguard S&P 500 ETF or exchange traded fund, ticker symbol VOO. So 40% of that is in the S&P 500, the 500 of the biggest companies in America, names that you know: Amazon, Facebook, Google, McDonald's, Home Depot, Coca-Cola, Pepsi. These big companies. 40% is in that. 10% Vanguard Emerging Market ETF, so maybe companies in India, only a smaller percentage. 20% is in the FTSE Developed Markets. FTSE is they trade on the London stock market. So some of your Great Britain companies. Another 20% in the Vanguard Small Cap ETF. Some of your smaller companies, I think maybe under $1 billion. And then you have 10% in the Vanguard REIT, which stands for Real Estate Investing Trust. So companies that invest in real estate. It could be storage. It could be senior housing. It could be a lot of different things. So that's the breakdown, okay? Let's hit this and see what the other spectrum, other end of the spectrum is conservative. So it's a conservative portfolio is more appropriate for those with short-term horizon, maybe closer to retirement, or low risk tolerance. The portfolio is weighted toward fixed income. Whenever you see the term fixed income, they usually mean bonds. And if you look here, everything is bonds, 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 bonds. And basically, it's about a fifth of ultra short-term corporate bond. And basically a bond is basically whether it's a government bond or a corporate bond, these entities are asking for money for a certain term, whether it's 2 years, 3 years, 4 years, 5 years, and they're going to give you a set rate of return, or basically an interest. It's less volatile or less risky, but the returns are also less. So this is the other end of the extreme. Conservative. Let's move on. Moderately conservative. So you're conservative, but you want a little more growth. So you have the Vanguard S&P 500 ETF, 24%. So you got some big companies in there. Then you have the Vanguard REIT, real estate investing trust. So you have a real estate exposure, only about 4%. You have about a 30% in bonds. iShares investment grade corporate bonds. So, more conservative. Some Vanguard small caps or smaller companies, maybe less than $1 billion. Another third in bonds. So if you look at it, 30% is in corporate bonds, another 30% is in treasury bonds. So 60% of your portfolio will be in bonds. Okay, let's move on to, let's see what the next one is. Moderate. So this is going to be almost like a hybrid, a little of this, a little of that. A moderate portfolio is most appropriate for those with medium time horizon and moderate risk tolerance. This portfolio is balanced between equity, meaning stocks, and fixed income, meaning bonds, exposure than the conservative portfolio. And you see, you have the Vanguard ETF, 29%. Emerging markets, maybe like companies in India, a small amount. You have treasury bonds, 20%. Developed markets, FTSE, that's in London, 12%. Small caps, companies maybe less than $1 billion. Some real estate exposure, 6%. And then you have corporate bonds, another 20%. So let's move on. I think you kind of get the point. Let's see what else we can see on this side here. Right on the portfolio, you see roundups. This is a cool aspect of Acorn, actually. So you have your debit card or your credit card linked to it. You buy a cup of coffee at Starbucks for $3.50. Acorns rounded up to $4, make it a whole number. That 50 cents will be invested. And when it gets to $5, they'll invest it in the market. So you buy a coffee for $3.50, that 50 cents change gets put into your account. When it gets to $5, when you keep buying stuff, they keep adding up the spare change. When it gets to $5, then they will invest it. But there's something cool. It's called a multiplier. See here? Let's hit this here. It's called a multiplier. So let's see here. So you set it and make it automatic, which I said that's the best way to do anything, or especially investing. Make it automatic. Because if you have to wait and make a decision every week, will I invest? Will I invest this week? Well, no, it's a hard week. I got to pay the light bill. You know what? I'm not going to invest this week. Well, when you make it automatic, it's automatic. I have my phone, and so I look at my phone and it says, okay, Acorn, take out $240. Great. So here's the multiplier. So the spare change, you can say multiply it by 2, multiply it by 3. In my case, I say multiply it by 10. So if I have 50 cents change, they're going to multiply it by 10. They're going to make it $5. Just to be a little more aggressive. Okay, let's move on and see what else we have here on the Acorns app. Recurring investments, I have it set at $240 or $240 a week. You can make it whatever. You can make $10 a week, $20 a week, $50 a week, $500 a week, whatever. But you're doing this to make it recurrent. Every week, take this out, take this out. Down here, they have performance, so you can look and see how your investments are doing. It says, okay, it's been over 2.54% increase, or about $1,300 increase. You can get more details. We don't have to go into that. Over here, you see like a one-time transfer. So if you said, okay, I want to get a boost. Okay, so I'm going to do a one-time $5, $25, $50, $100, or you can make whatever number you want. Hit it one time. Okay, so maybe you got a refund from the tax, from your IRS. You said, okay, I'm gonna do a one time hit of $1,000. Boom, you can do that. Withdrawal, if you want to withdraw money. Let me add a quick note here. Acorn is not super liquid, which means that if you really want money like today, because you have some financial emergency, it's going to be kind of, you won't be getting it that day. They have to sell shares, and it can take up to 3 to 6 business days for you to get the money. They have to sell shares, get the money, depending, is it a Friday, is it after 2 o'clock, then that money has to be hit into your account. So it's not super liquid. So if you want money, or you want the ability to get money right away if you need it, that's the downside of Acorns. You might be better to put it in a savings account or money market account if you want to be able to get money right away. Another cool aspect of Acorn is that if you hit like the potential, you can they'll see, okay, if you keep investing what you're doing right now, this is how much money you will have if you continue. You'll have $2 million, by the age of 90 if you keep doing what you're doing. So that's kind of cool. So let's see here. Oh, let me add this too. You see over here where it says earn or found money. So if you buy something from one of the partners, I know Walmart is one of the partners. So you went Walmart, you went shopping, you spent $200, and Walmart said we're going to invest whatever, $2 or $3 or $4 or $5 into your account. That's free money that you didn't really invest on your own. You're going to go shopping anyway, and just for partnering with Acorn, they'll put some money into your account. So I've had $22 of found money added to my account. Here they have this tab called Grow Your Knowledge. So if there's an article down there about investing, there's an article down there, but that's to grow your financial knowledge. You can invite friends, let them know, okay, this is something you can do, and then if they use the code that is attached to the email you sent, you'll get like a little bonus or whatever. So all in all, I'd say Acorns is a great thing for the especially the new investor. One, it gets you started. It gets you over that hurdle of, I don't have 20, 30, 40, 50,000 to get started. Do you have $5? You can get started. And remember, it's not timing the market like, okay, do I get in? Is the market is at the bottom? Is it at the bottom now? Is the prices low? Is it the right time to get in? It's not timing the market, it's time in the market. You have to be in there to get that compound interest to grow. So it's easy. You set it and forget it. It's passive, meaning you're not really, once you pick, you want aggressive, you want moderately aggressive, you want conservative, and then you link your account and you put like the recurring investment, and you want to add the multiply if you want to do that. It's pretty easy. It pops up on your phone. Okay, Acorn took out $200. Acorn took out $100, and your money is growing. Their motto is investing in the background of your life. And truly, you could be at the gym working out. You could be reading the Bible. You could be working. You could still do and living your life. And you were going to go shopping anyway. You were going to go buy gas anyway. But because you used the card and gas was $80.50, the change was invested for you. Okay? So that little mental barrier to invest is alleviated. Okay? Because you don't need that much money. You need $5 to get started. Some of the cons: one, you can't pick your own stocks, right? The ETF is a basket of stocks, right? So, like we just went over it, the Vanguard S&P 500, ticker symbol VOO. They're picking that. 500 companies are in there. I'm a big dividend investor guy, and I want the highest return for my investment. So I want companies paying 4, 5, 6, 7% a dividend return. But in that basket, I can pick and choose. If I bought to buy the basket, some of those baskets might have stocks returning 3% dividend, 4% dividend, but there may be also some stocks that don't pay any dividend at all, like Google or Amazon, or some paying only 1%. And you have to buy the whole thing, so I can't pick and choose. But on a whole, I think it's a great thing for the beginning investor. I think it's a good way to get you started. Right now, I think the great savings actually, because right now what I'm doing is I am letting Acorn do its thing, take money out, investing in the background of my life. When it gets to be $1,000, $2,000, I take it out, and I'm actually doing some other stuff that I'm gonna make other videos on. So, guys, there's a quick video from the MD Investor about taking action in 2020. It's not just about learning and saying, "Oh, that is interesting." It's more than interesting. We're gonna make it. We're gonna make it happen. We're taking action. We are investing, and we are getting after it in 2020. So if there's anybody out there you think could benefit from this personal finance information, let them know. MD Investor in the house. Command your money to grow. Command your money to grow. On YouTube is MD Investor. Don't forget to hit the subscribe button, hit the notification bell so you'll be notified when new content are coming out. On Instagram it's MD Investor 1. So getting after it in 2020. Command your money to grow, and we will see you on the next video.